It is no surprise that I've wasted countless amount of time trying to find a strategy that would work. Now this is all for good reason because it led me to find price action and find my consistency in price action. But one of the most important steps of any strategy I feel is having a guideline on the chart, which is also known as a markup, whether it be trend lines, simple horizontal lines, supply and demand zones. All of these strategies will include some sort of markup, and I feel it is very important. Whether you're SMC traders marking liquidity, some of these work, some of these don't. I'm going to explain exactly why I use what I do and how it's helped me. It has become a part of my routine. If you were to watch my entries on live stream, you'll see that I hold limited drawdown, and that's thanks to having accurate zones which are done by the markup. So in today's video, I'm going to break down the secrets of how to mark up properly, and not a simple way that is not going to work, but is an effective way that I have found during my journey, and also explain to you why some of these other things might not exactly work. So if that sounds interesting, let's get into these markups and let's get it. All right guys, so as you can see in front of me, I put out the different ways to mark up a chart, and I'm going to explain exactly why I use horizontal lines, which are these, right? So first of all, we have trend lines. Now, trend lines is popular. You guys have heard about it. The reason I personally didn't go along the area of trend lines is that I mostly like to look at trading market in ranges. So trading from one zone to the next zone. And I didn't like the subjectivity of trend lines, meaning that they are not 100% certain. Meaning if someone can draw it slightly off, if someone can, do it by the wicks, if someone does it by the body, because those are all rules. So I didn't like that, which is why I didn't use them myself. I'm not out here to slate any strategy that uses it, but I'm explaining why I didn't personally use it myself. I wanted something more concrete, and horizontal lines you can't argue, because if there's a resistance here defined by this bullish candle closing by a bearish, you can't really argue that that's not a resistance, because it's literally what price it could create. So that's the first thing. So the second thing here is going to be supply and demand zones. These are very popular. Or people draw big support and resistances. Like they'll find a big resistance here and they'll just draw it as a whole box like this. This is a resistance zone. I'm looking for sells. I hate that because it's so inaccurate. It's such a large zone and you're really ignoring the fine details of the market that matter. It's good to give a rough idea, very basic concept, but doesn't really teach you much. Supply and demand is a different strategy. You're looking for reactional based trades, not trading with a confirmation, meaning that of you leaving the zone, right? You're looking for price to come into that zone, react, and then get out. But with horizontal lines, it is extremely accurate because you're using one thin line and you can get a perfect close and you can really manage based on that line there. So that is the reason why I went for horizontal lines and marking support and resistance accurately. Because it suited my trading style, because supply and demand, as I explained, is a reactional based trade. I'm looking for a zone to zone. So let's go ahead and show you how I do my top down analysis. This is not some basic support and resistance that doesn't work that people say. This is actually some real horizontal lines that actually work and are actually extremely accurate, as you can see from my trading, and of course me showing you live on a daily basis. So let's go ahead and dive into that. So I want to first start off by some very, very basic things here. And this is just going to be an overview just so we cover all intended audiences watching this video. What is a resistance? Resistance when we have a bullish candle followed by one bearish candle close. I said very importantly, listen to the word close. Creates what? Creates a bearish, creates what? Creates a resistance, right? Same thing with a support would be a bearish candle close followed by a bullish candle close will do what? Will create a support. So that's how you define the support and resistance. Now, what if we have two candles? The better. One candle is minimum to define a support and resistance, but a real high should be two candles or more, right? So when we're saying a proper resistance is two candles or more, and a proper support is two candles or more. What I mean by two candles is two candles closing bullish away from the one that closed bearish, or two candles closing bearish. That's really to define, but that doesn't mean we still ignore one candle closures. They're just weaker, because if you think about it, a one candle closure on a daily time frame, if you were to go on a 4 hour, it would be multiple candle closures. So it's still strong because it's based on a daily, whereas maybe a 5-minute one, 15-minute is not as obviously as strong as a daily one candle closure, right? That's what I'm trying to get out. So now let's get into how to actually mark up. So you're going to need horizontal lines. I love to name my lines. We're going to use gold here for this example, and we're actually going to start all the way from the monthly time frame, believe it or not. We need to really start from the outside. Now the good thing is you only need to mark this once a month because the candles only close once a month. So you're only marking time frames when candles closes. So monthly time frame, if you look at it, we are far from everything, right? We had all-time high here, so you wouldn't have to scroll back, but on other pairs you can scroll back until you find a support and resistance and mark it. And once you learn from watching this video, so make sure to watch to the end and leave a subscribe and a like if you're enjoying it, by the way. It does really help the content. If we could get it up 500 likes, really does help, and I would appreciate it. You can go back and you'll understand how to mark it. Okay, so we can see nothing to mark. We don't mark this candle because it has not closed yet, right? 22 days till this candle closes. This support down here we don't need to mark because it's so far away, not even a reason to mark. So next time frame we go to a weekly, same story with this. We only need to mark this once a week. Okay, so let's say we were down here, it would make sense to mark this weekly support here, and I'd name it WS. The reason I mark this, even though it's behind the level, remember resistance can become support. We can get a scenario like that where we retest this zone here. So I do still like to mark those. And then obviously our next resistance, you're always looking most recent, right? You're always focusing on most recent. Don't worry about things super far away. What is the most recent support and resistance? Support is all the way down here. I don't need to mark it because it's super far away from where current price is. I'm always marking relative to where price is. This weekly resistance, look, from here to here is almost 1,000 pips. So I don't really need to be marking these, but to just teach you guys, I personally won't, just to keep my charts cleaner, but just to teach you guys, I'm going to mark it anyways because price is so far from it. It's not really going to be relevant. But once a week, you should mark this, especially if we're close to one of these, okay? Because it's going to be important when you're taking trades, entering on 15-minute, 30-minute, 15, whatever. You need to know because you could be buying straight into weekly resistance. It looks a perfect trade on the 15, but this is really giving you a guideline. It's showing you where you cannot trade on the charts, and that's so important. If you're trading in a place where you cannot trade, your trade has a high chance to fail, guys. Has a high chance to fail. So make sure you get this stuff right because it literally is a cheat code, and it's showing you, hey, I have much higher probabilities trading in a zone without resistances and support, and I know my limits where I can place my take profits and where I can enter trades. It's literally giving you a cheat code. As long as you know how to execute with all of the other factors that I teach on my channel, I encourage you to go watch the videos. It really helps, right? It makes things super accurate and makes a plan, and it's just overall something you need, right? So daily time frame is next. So we went monthly, weekly, daily. Now on here, daily time frame, we do have this previous daily. I do like to mark these. So I keep this here daily resistance because right now this is going to be a potential resistance. We can see some reaction, but not fully reacting off it yet. Otherwise, next one is all back here, but like I said, pretty far, man, pretty far. Don't even need to mark it being that far. So again, looking at most recent, we do not mark this daily support. Why? Because the candle has not closed. Don't need to mark it. Move on. Next, we go to 4-hour time frame. We look at 4-hour. Now we have some more. As we get lower, we start to get some more price action. So 4-hour time frame, we mark this one right here. Boom. This is going to be our 4-hour support. And then we look left, always looking left. Where's our next resistance? Not this one, not this one back here, not this one back here. No, most recent. And the most recent resistance is sitting right here. And we mark that 4R for 4-hour resistance. Right, so now we're starting to get our guidelines here. Look how nice this is. This is showing us where we can and we cannot trade. Next time frame I go down to is 1-hour time frame, and I do my markup. Now there's something I use which is trading bias, which means when I come to a session, I have an idea of where I have an idea of if I want to look for buys or look for sells. So if I'm only looking for sells today, there's no point of me marking all resistances up here because I'm looking for price to go down. So if it goes up, I'm not really interested, okay? Same thing if I'm looking for buys, okay? I'm not going to mark all my selling zones. But to show you guys, you know, that's how you can limit your lines. So the next thing here is we have this. So this is an interesting one. What if daily resistance and this 1-hour resistance are very close to each other? In this case, these days, I just put a box like this. The reason I don't move it up is because we reach daily resistance first. I could be taking a plan today where I look to take buys from down here. And if I buy and price suddenly rejects here and put my take profit here, it's going to be extremely annoying and I'm not going to know why. But that small detail can secure your profit, but you will miss out because you're targeting the high and it doesn't reach the high. It rejects before the high, but we know why it's rejecting before the high, right? So that's definitely a possibility. So I just like to draw a little box like that just to cover those both zones there. When we move on to 30-minute here, we can see that we have a 30-minute support here, right? Most recent, that's a 30-minute support. So we can mark that 30-minute support. You can mark all of these supports down here, all of these. But like I said, when you pick a direction, you don't need to mark all of these. And the next thing is, you don't need to mark something you're not going to trade. So for me, from here to here is not a tradable range. It's too small of a range. If you look at the average size of the candles right now, that's a 50 pip candle. And this range is only 35 pips. It's not really worth it. So in this case, I don't even need to mark that range because I'm not looking to trade it. So instead, I'll just keep this simple. I'll move this line down to here because remember, this range I'm not trading. I ignore this because it's not somewhere where I'm trading. I keep my charts clean. Really want my charts as clean as possible. These people who have tons of support and resistance line, it's fine, but I personally do not like to trade with like that. Like I said, I normally pick a direction. And I'm pretty sure, and I only mark in that. So next time frame we go down to, which is the last time frame of the day, it's going to be the 15-minute time frame, which is my majority of my entry time frame. We can see we have a resistance here, so I know this won't be a tradable range. I will actually put a line there now because I know from here to here I'm not going to look to trade. So I'm going to put a line here. I'm going to put this as 15, and look, our 30-minute support is lining up, so I don't need to remark that. Support down here is also beautifully lining up. And now we have a beautifully marked up chart, and this is where I can plan. So if you watch my trading ranges video, watch my free course, you'll be able to see how to actually take entries on these trades. But now I can see, okay, above here, I have clean area. No obstruction there, right? It is totally clean until this next resistance. I have nothing to worry about, right? We'll check, double check 1 hour clean, 30-minute clean. Everywhere is clean in this zone. So that's an ideal zone, right? You know you will have higher probabilities winning a buy in that zone. Right now, we have this zone here to capitalize on, but everyone's going to be looking to target the highs. But what might happen is we might reject right here. Now, this rejection, let's say you had stop loss below this low, that can stop you out those rejections. So I know if we reject here, I know why, because there's a daily resistance. I've done my homework, right? And today, if I was looking for sells, here I can see it's all choppy, it's a mess. But below here, I know I have some room to trade into, right? So same thing below here, I have a little bit more room. So this is where you can start to build your ranges like this and build this. So I recommend you do this every single day. As a fact, I make the guys in my exclusive group every day send charts for feedback, because it will take some practice to get used to it, mark accurate ones, find which ones are relevant, not relevant. But the key rule is I'm always looking at most recent. So if we look at most recent now, most recent support would be this on 15, and most recent resistance would be this. But remember, only mark it if you need to trade that range. If it's not a tradable range, don't waste time. And that's it. So it's a very good drill. You'll need to practice it. Show up to my live streams as well. You can see me and my markup before the live stream compared to my own markups with the pairs I trade, and you will see if you're getting the hang of it or not, and if you can get feedback from me. So I hope you guys enjoyed the video. If you did, let me know in the comments below. Leave a comment. Appreciate you guys as always. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.